Hi everyone, good evening, and welcome to our discussion on Union Budget 2026. Joining me today is Mr. Mohit Talwar, CIO at InvesTek. As we look ahead to 2026, the Union Budget, gives us a useful starting point for this conversation with you, Mohit. It feels less about short-term excitement this time and more about, setting a stable framework wherein, we are focusing more on the fiscal discipline and long-term capacity building. In many ways, it actually sets tone for a year where fundamental and execution may matter a lot than momentum. So, Mohit, with that context, how are you reading this budget as investors begin to position for this year? If we step back from the headline numbers for a minute, the budget appears almost understated, placing greater emphasis on the institutional credibility, fiscal continuity, and execution rather than, market moving announcement. So, is it fair from your perspective to say that the government is now optimizing for long-term capital confidence rather than, short-term market sentiments?
First of all, thanks a lot, Rinku, for this question. I think one of the key things which government have emphasized on this budget is not looking at populist measures to infuse artificial capital in the economy and ensure that long-term capital and growth capital comes back in the economy. So from that perspective, this is definitely a budget which is emphasizing on long-term growth, emphasizing on structural growth story of Indian economy, and I'm pretty confident that the kind of growth that we are looking at over the next couple of years, with fiscal prudence, with maintaining the debt to GDP ratio, maintaining the entire ecosystems together in terms of manufacturing, in terms of services, in terms of data centers, and all the other ecosystems in terms of logistics. So I personally believe this is one of the long-term budgets which the government has identified to create fiscal prudence and capital allocation in the economy rather than short-term volume trading in the economy.
Okay. So Mohit, if we see there's also a clear absence of, aggressive consumption boosting measures, instead, this time the focus is more on the capacity creation and income generations over time. So is this, the time wherein government is actually signaling the near-term growth volatility, by which we, would, accept that, at this given juncture, from a long-term perspective, or near-term growth volatility is expected?
Yeah, I think when you focus on capital formation, when you focus on capacity building, when you
Mhm.
focus on different parameters which are important for the growth in the economy, whether it is interest rates cut by RBI, whether it is reforms which have been undertaken on the GST, whether it is the kind of budgetary allocations they have done across various sectors, whether it is chemicals, whether it is MSME, whether it is long-term growth capital allocated to different sectors. I personally feel it is important for the government to understand, the people to understand that government is focusing towards sustainable long-term growth. And I think
Mm.
from that perspective, this is more towards long-term growth story budget, which is not just to ensure that short-term capital allocations are allocated towards sectors, but broadly overall reforms agenda has to be pushed forward towards long term. I think from that perspective, it is one of the more practical budgets, I would say, rather than
Mm.
populist budget.
Okay. And also, if we see historically in last couple of years, okay, in all the budgets that has always come, one thing is, for sure that fiscal consolidation has often come, at the expense of growth. Wherein if we see in this budget, it claims to do both, reduce deficit while protecting capex. So, from your understanding, how credible is this balance, according to you?
So I think allocating 12.2 lakh crore of expenditure towards capex is one of the significant move which the government has taken, because if you see various sectors needs a lot of capital, because at the end of the day public and private investments was something which was missing in the last couple of years. And the reason for why overall consumption was subdued, the reason for why overall demand was subdued, because there was not enough capex given to most of the sectors which were really required. And public and private investments largely were dried up over the last couple of years, and hence this budget is addressing rightly so the requirements of MSMEs, the requirement of demand side of the economy, the requirements of the supply side of the economy, in ensuring the enough capital is allocated to various sectors to make sure that the entire fulcrum of the economy moves, which takes the growth to the next level. And it
Mm,
also ensures policy stability. It also ensures stabilities toward long-term reform in terms of GDP growth. It also ensures the clear agenda of government that they want to have India become a manufacturing hub over the next couple of years, probably replacing China. So I think it is a very strong and bold move, aligning from short-term growth to a more long-term capital incentive intensive growth, budget basically.
when you rightly mentioned about capex, so capex has been a recurring theme for several years now, Mohit. But this time, if we see, it seems broader, wherein we are covering logistic, defense, electronics, manufacturing, as you mentioned, MSMEs together. So, is there an evolution, from an asset creation to, ecosystem building now, according to you?
So I think if you talk about capex, it is the entire value chain which basically comes into effect when you are putting, the entire, capex towards the different sectors. So whether it is logistics, whether it is supply chain, whether it is manufacturing, whether it is public and private investments, whether it is infrastructure, whether it is export, or whether it is MSME, all these to stitch together all these different fulcrums of economy in terms of providing enough capital, enough capex, so that all these sectors grow separately, and actually you get the government's agenda to have a 10 trillion economy over the next 2 to 3 years by 2030. That is our aim. So to achieve that, and of course we are also aiming at 40 trillion economy by 2047. So I think which requires a lot of focus on stitching all these sectors together, which requires a lot of capex, which will require a lot of capital allocation in all these sectors. So I think it is a right move. I look at it as a very focused long term move of the government, which probably will have a lot of effects on the overall sentiment, demand, and creation in the economy. And of course, in return, we have our GDP growth rate, which we are talking about 8%. So we look at that as a base, and I think from we'll take it forward from there.
So, when you say manufacturing, manufacturing, Mohit, if you see, has been a long, policy aspiration. But in terms of execution, if we see, it has often lagged. So what makes, this phase different enough, for investors to take it seriously this time?
So, while we are talking, I think we've had US trade deal into effect today. I think
Mm,
we've also had couple of other trade deals which have happened in the last couple of weeks and months and quarters. We've had the Australian trade deal. We have UK trade deal into effect. We also had European Union trade deal, which was of course called as the mother of all deals. So I think largely manufacturing, what India wants to focus is make in India and consume in India, and supply. I mean, supply for the world. So I think we want to that's our aim. We want to not only become a powerful manufacturing hub of the for the world, but also at the same time, looking at our large population of 1.4 billion, I think in terms of the kind of incentives that the government is giving, in terms of the policies that the government is formulating, the entire focus, it is a very serious focus that the government has in order to make India as a Atmanirbhar Bharat by 2047. And I think for that into effect, I think manufacturing needs to be you know the focus point of the economy and the government. I think they're doing the they're doing the right work in terms of allocating the entire focus towards the manufacturing.
So on the other hand, if you see, our FM, she also placed a lot of, emphasis on the MSMEs. So while we understand now, they don't see MSME as just a social priority, but as a structural, growth lever. So how would you see this, this shift, from an investor point of view?
Yeah, I think MSME largely, if you talk about most of the MSMEs, they have been not only job creators, they've also been overall, domestic supply chain, entire ecosystem related supply chain related ecosystem. They have been providing all of that, and they have been the backbone of the economy largely. If you see most of the sectors, MSMEs are all everywhere. But the biggest problem which MSMEs largely had over the last couple of years is access to capital. And I think more importantly, access to growth capital. And that has been addressed very sharply and very clear focus by the government by giving and allocating about 10,000 crore growth fund for the MSMEs. And I think which will not only help the MSMEs to have excess of capital for their growth requirements, but also ensure that the entire banking and financial services ecosystems come together in order to kind of in case the MSMEs require any kind of capital for growth. So I think it is very good move by the government, and I really look at it as a again the supply chain stitching the entire ecosystem together. The MSMEs have one of the major roles to play.
Okay, okay. The other thing is, the increase in STT on derivatives, though on the numerical terms, if we see it's a very small change. But then we've seen, how the markets reacted on the day of budget, So what do you think, is this less about revenue and more about market philosophy, or is, there is something different to it?
So
Clearly, what I feel is markets, have not liked it, the increase in the STT.
So I think SCT is largely, been increased on the derivative activities, which is largely from a trading perspective, in terms of the future and options, and of course, government clearly wants to discourage speculation in the economy.
Speculation.
They are looking at more. Long-term money which comes into the equity markets, long-term capital which comes into the equity markets, which is, of course, they also don't want investors to have a short-term mindset of trading and speculation. And I think from that effect, it is the right move. I think uh, nothing against trading activities. I think this is a normal scenario of any capital markets. But I think what government is looking at patient long-term capital, and I think that requires this change which the government is coming. While it will not be a very large effect in terms of the overall revenue numbers, but yeah, it is just to probably have some kind of discouragement towards speculative activities.
Investors here, have a very different view, They are sort of arguing that, any increase in the transaction cost harms liquidity in the market. From a structural standpoint, do you really think, it's a real risk, or, is it just with the investors and their mindset?
So probably, I would say, as far as uh, market capitalization of Indian equity markets are concerned, we are currently close to 460, 470 lakh crore of market capitalization, which comes to about near about 5.1 trillion. And I think we are having deep financial markets. So we really don't I really don't believe that a small change in the
The
transaction fees,
transaction cost.
short-term transaction cost will have a huge impact. Rather, it will have more structural impact of patient long-term capital, which mindset of the investors change and shift in the mindset of the investors from move away from the speculation and get into more capital formation in terms of in terms of the capital markets. And I think given the size of the economy, given the nature of the transactions and the overall base, I really don't feel this will have too much of a large effect as far as the activities in the financial markets are concerned.
Okay. So what do you think, would it be fair to say that, this budget nudges, market away from being event driven and, focusing more towards earning driven?
So I think definitely it even earnings driven and not event driven, because
Mm,
whatever you see around, whether you talk about GDP, whether you talk about companies, whether you talk about businesses, everything is on on a base of a sustainable growth, right?
mm,
So if you talk about GDP, we are looking at about 7-8% GDP growth, and if you take nominal GDP growth, I would look at about 12 to 13% nominal GDP growth, adding inflation. And largely, we are talking about, of course, so many quarters of uh, uh, downgrades in the earnings. We are looking at now sustainable growth in the earnings post GST, post income tax cuts, post consumption boost, and post reforms in terms of the capital expenditure, which on the capital formation we have seen. At the same time, we are also looking at companies, looking at accessing capital and funds across the businesses and setting up new manufacturing facilities, which will actually uh, have a very high growth rate in the economy. So I think this particular shift from specifically towards long-term patient capital is a
mm.
very natural shift, which is which will be going long way as far as the economic growth is concerned.
Okay, okay. One last question for you is, if investors want to take one mindset shift from this budget, what should it be according to you?
So, of course, be a long-term investor, access, patient capital, long-term funds. Don't move away in the speculation on the short-term, the speculative market, or whatever is coming in the short term as far as the momentum is concerned. But I'll also tell you three things which I really go about telling all my investors, because when you talk about capital markets, there are three important things which one should know, which I think each and every investor, whosoever is coming in the capital market, should actually look at. The markets have a very different way to react in the short term, medium term, and long term. So
Absolutely.
if you talk about short term, the markets are largely reacting on the momentum and the announcements and the short term moves which are happening in the market, which is news events and all on the short term side. If you talk about medium term, it is largely towards the interest rates, towards the government announcements, towards forex rates, towards any kind of policies which the government is formulating for various industries, how the markets react in the medium term. But if you talk about long term, it is prudent long term growth, patient capital, which really follows the earnings, it really follows the quality, it really follows the fundamentals. And I think that is what most of the investors should look at. Focus on long term fundamentals, growth, cash flows, long term stories of various companies, of business cycles of various companies. And I think if you are looking at fundamentals, if you are looking at good quality high growth companies with strong management, with strong fundamentals, and with the budget supporting the entire capital expenditure, I see this as a very high growth phase over the next decade. So I think my request to all clients is to not look at this market from a short-term perspective. Be a long-term investor. And I think, as I just told, that the entire capital allocation, budgetary allocations, is towards make in India, making in India, and supply for the world, and making an Atmanirbhar Bharat. So I think all these things boil down to one thing, that don't have a trader's mindset, definitely have an investor's mindset.
True, true, true. So, Mohit, as we wrap up, what really stands out, from our today's discussion is, there is a clear shift in how investor may need to think about the year ahead. The budget, much like your perspective, as you rightly mentioned, that point towards a phase where discipline, execution, and earnings durability matter more than the excitement, or short-term market narratives. So what I think is this year is, less about chasing momentum and more about aligning the portfolios with long-term fundamentals, patient capital, and thoughtful asset allocations. So with that, Mohit, I think thank you so much for sharing such insightful perspective of yours on budget 2026.
Thank you so
Thank you
much.
so much for joining us.
Thanks
Thank
a lot,
you.
Rinku. Thanks a lot.